If you're in college or just finishing up, you might want to stick around for these tips to be debt-free as quick as possible so you can just move on with your life. Student loans are the only loans that stick around forever. You can't get rid of them. Even if you declare bankruptcy, they're still with you. So it really is in your best interest to just pay them off as quickly as possible and just move on to other goals you have. So for me, I knew I wanted to save for a house, I wanted to invest, I wanted to move to another country, and all of this was only possible if I got rid of my student loans. So here's what I did to knock off all of my student loans 3 years after college, making $12 an hour. My first tip is to get a job ASAP. Kind of doesn't matter what job. When I graduated college, I graduated with a liberal arts degree, specifically history. I knew it would probably be tough to get a job in my field, especially because at the time when I graduated, the economy was in complete shambles. We were going through an economic downturn worldwide, and no one wanted to take a chance on me. I had no experience really. I was fresh out of school, so I took what I could. I took a job in a lab, and I was really doing manual labor. Honestly, that job taught me a lot. It maybe wasn't my favorite job to be doing, and I was able to save a lot of money because I was working overtime when I could, and the $12 an hour really added up. I was lucky to be making the $12 an hour when I was able to do it, but it doesn't matter how much you're making. The point is to start accumulating money. So my second tip is to throw absolutely everything at your loans. It feels like a lot of sacrifice and discipline to pay off your student loans, and it is, I'm not going to lie, but that feeling of freedom when you're paid off in full and you can use that money towards something else is indescribable. While I was working, I lived super frugally. I lived at home, which was quite a luxury. I think it's something to consider. I know it's so hard to have that freedom in college and then be reined in by moving back home with your parents, but to be honest, I think it's the fastest way to financial independence. I still pitched in. I still paid my own personal bills. I paid things like my car insurance, my student loans. I paid my own grocery bill, and I even chipped in by paying the cable and internet bill for my family. I was paying for my keep in a way, but my parents were happy to have me back. I took that time to really basically stash my cash. So anything I earned, I tried to keep as much of it as I could, only paying what was necessary. I didn't go on shopping sprees. I didn't bring home any 50-inch TVs or anything like that. I think another benefit of living at home is having a small space that you're confined to, so you really can't do too much damage and go crazy. I did have a credit card, but I only paid what I knew I was able to pay off each month because I physically had that money in the bank and I never went over it. By living within my means and living at home, I was able to save a ton, and everything that I saved, honestly everything, went to my student loans. I would just throw wads of cash at my student loans, and I overpaid my student loans each month by a lot, just to make sure that I was keeping ahead, which gave me a cushion too. If in the future I lost my job or I needed to make another move, I had that cushion of having paid my loans so far ahead that nothing but the minimum was due like 2 or 3 years past the point I paid. My final suggestion is to really know how your loans work. Firstly, most loans have a 6-month grace period after you're graduated. So in those 6 months, interest isn't accruing on your loan amount. Take full advantage of this. When you have that grace period and the interest isn't accumulating, you'll be knocking down the principal. And the principal is the amount that your interest will accrue on. So the less you have in principal, the less your interest can accrue on it. What a lot of loan companies won't tell you, you have to kind of read into it. They sneakily apply whatever payment, especially if you're paying the minimum, they apply all of that to the interest on your loans, which doesn't hit the loan itself. So what I recommend, and what I did personally, was I would go in each month and actually apply that amount that I wanted to apply to specific loans. If you create an auto payment system and you kind of set it for the minimum and forget it, you'll be paying for years. So look through your loans. Usually you have more than one, and first take a look at your interest rates. If you see one with a higher interest rate than the others, that's the one you want to pay off. If, like me, all your loans are the same interest, I believe mine was about 6% at the time that I was paying, then what I did was I looked at the largest principal amount, because what you want to do at that point is knock out as much of the principal so that the interest can accrue on a smaller sum. Once you've identified that, you can take that loan payment. Let's say you have $300 to apply toward a loan. You can pay off the interest first to whichever loan you want, and then use the remaining amount to pay into the principal, because the lower your principal is, the less the interest can accumulate and the faster you'll be able to pay it all off. Because of course, the longer your loans are alive, the longer you're accruing interest on them, which means ultimately the larger the balance that you're paying on these loans. So yes, you could start with $25,000 worth of debt, but that debt will accumulate into being $35,000 and $45,000 the longer you wait to pay it off. So you're paying like twice as much as you need to for this degree, and you're not making any headway into it. So what I recommend is really get to know how your loans work, take advantage of that 6-month grace period, and throw all your money at your loans. I'm really passionate about living the kind of life you want and not being restricted, which for me starts with not being financially restricted by anything. That money that you're saving after paying off your loans, you can use to invest and have that money make money for you while you figure out your life. And it just gives you this cushion to experiment, especially when you're in your 20s and you still aren't sure exactly what you want to be doing or how you want to be doing it. Having that monetary cushion is such a huge relief. It gives you the ability to try some new things out and to really live the way you want without worrying about the financial repercussions. I know everyone's financial situation is different, and I know that I was particularly lucky, but I think even if you have other circumstances, I think keeping these 3 tips in mind will still help you go a long way toward being debt-free. So I hope this helps, and stick around for other videos.